Just because you have access to like $1,000 in your credit card or much more, it doesn't mean that it is yours or it's free money or you can just use it for anything you want to do without having a plan on how to pay it back. Hi guys, welcome back to the channel. My name is Tiga. If you're new here, thank you for stopping by. And if you're an old subscriber, thank you for returning. I know I've been missing for like a few weeks. It's been extremely busy time and that's why I couldn't make it here. But I promised to release at least one video every week. So without much ado, let's get right into the topic of today. So today we'll be considering 6 financial mistakes that immigrants make when they move to the West. The West being like the US, the UK, Canada, other Western countries. So being an immigrant myself, I moved to Canada about 3 years ago, and the financial system is very different from the financial system I was used to in my home country, Nigeria. So the financial system in Canada and the way you deal with your finances in Canada is very different. As a new immigrant, you would have to learn the process of finances in your new country and not assume that what you knew back home would be able to get you financially stronger because it's a different system and you need to learn it. The first mistake a lot of immigrants make is not building credit early. Immediately you move to the country and you've been able to settle in and get an account, you should get a credit card and begin to utilize it. A lot of immigrants who move from Africa are not used to this because most of Africa has a more cash-based system where you pay for whatever you want to purchase. But the West works a bit different. So the West has more of the credit system. They want to know that you are credit reliable. You can be given credit and you would pay it. So immediately you get an account, you should get a credit card and begin to utilize it and pay it back. Basically you would not have any issues with interest or interest charges once you can use your credit card and pay the amount in full before the time due. But for you to like make progress in the country financially, you actually need credit. To rent an apartment, you need credit because your landlord is going to check your credit history. Sometimes even to get a job, some jobs check your credit history to just know how trustworthy you are with like credit and other things. To be able to purchase some bigger items like maybe a car, if you want to purchase it on a loan, or a house, you obviously need a decent credit score. So the sooner you start building it, the better for you and the faster obviously you get a better credit score. Number 2 is black tax. So a lot of time when you move to a new country, family and friends sometimes assume that your life is much better and you're in a better situation, so they begin to make demands. You have to be the one to put a cap at the demand. Like I would always say, I'm an advocate of a budget. So even in terms of giving to people back home, you have to have a budget for it. And once you exceed the allocation for gifts on your budget, then that's it for that month. Any other person that reaches out would have to wait till another time when you have allocation or an allowance in your gift budget to give, and then you could give them. It's very important for you to stabilize your income. It's very important that when you come to the new country, you first get a job and then you get used to the financial system. You know what your rent is, you know what your bills are, you know what else you need to be catering to, and you have an allocation for your savings and investments and your plans to like move your life forward. And then you have an allocation for gifts, and so wherever that gift is capped at, that's it. You begin to meet like immediate needs and then you can extend it to how far it can go. The third mistake that immigrants make when they move to new countries, living beyond your means. So the West is a very credit based system, and so it's very easy for you to own things via loans and begin to pay it off little by little. The system capitalizes on that. It's very used to people owning things on credit and paying little by little. It is in your own advantage for you to know what are the like important things you need to take a credit for and the ones that don't demand that. So just because you have access to like $1,000 in your credit card or much more. It doesn't mean that it is yours or it's free money or you can just use it for anything you want to do without having a plan on how to pay it back. For example, your credit card, any purchase you do not have precisely a time to pay it back, which is before the due time, you shouldn't even be making the purchase at all. So just because you can access like a car loan or other loans doesn't mean you should take it. Just because you see that you're qualified for credit does not mean you should take it. Don't get carried away. So the advantages to the West and advantages to where you're coming from. The cash-based system back home that you're coming from may actually favor you a bit in terms of think about if you can afford the thing. Like by the time it's the end of the month, can I afford this thing? If I cannot afford to pay for it, then there's no reason to have it, except you want to get like a car or something. I mean, a reasonable car to get you from point A to point B, not like a luxury car, just a basic car to get you from point A to point B. And you actually really need it, then that's when you should go ahead and get it. When I moved to the country, even though after some time I could actually afford to get a car, I chose to not get a car for a period of time, over a year, just because I felt like that money I could use it for something else or I could save it and be in a better financial situation instead of using that money towards car repairs of car, paying a car loan, servicing the car or car insurance. Because I mean, with car comes the whole package. So if you know that you don't necessarily need a car immediately you get into the country, like for example, if you're single or maybe even just a couple, for some time you could choose to, if you're in a city where the transport system works well or you work from home, you may not necessarily need to get a car immediately. So you could save up on that money and use the money for something else. And then when it's more convenient financially to get a car, or you can actually pay down for a car or a used car, then you could just go ahead and get it. But don't be pressured into living life way beyond your means. Like, don't be looking for the big brand cars, the designer bags, designer clothing, getting a mortgage that you cannot afford. Just don't stress yourself into having the appearance of looking like you're rich when you are not actually rich. It's okay for you to look poor when you have money than for you to look rich and not actually have the money you are portraying you have, because in the long run, you know what's going on in your situation. Number four is not understanding the tax system. So now, when you've moved from your home country to a new country, the tax system may be very different. Understand the tax system, understand the tax brackets in which you fall in based on your income, understand the benefits you're entitled to based on your income. It's so important for you to understand the benefits. Don't miss out on benefits that are yours because you are not looking out for information. Once you move to a new country, you really, really, really need to seek information in almost every area, financially, every other area, so that you don't miss out on something that you are eligible for, but because you did not know, you didn't do it. And also know like the timelines to file for your taxes. Your taxes actually help you get benefits. So even if you've earned no income in the year and it's time to file for taxes, in Canada we have April 30th as the cutoff for filing for your personal income tax. So if you do a business, then it's sometime in June, like if you're an entrepreneur. So even if you have not earned any income between when you came into the country and now, you still should file your taxes because it's tied to your benefits. So all the benefits you may be entitled to, especially if you're like a permanent resident or a citizen, you would not get them if you do not file a taxes, because the government basically doesn't have a financial record of you. So you need to file your taxes. You could be eligible to childcare benefits if you have a child. You could be eligible to child care subsidy. It's like subsidy for the daycare. You need to file your taxes to get that. Yeah, so you have some other like GST, HST benefits that you may be eligible for. So basically, any tax benefits that the government is giving out, if they do not have a track record of you or any tax filed for you, you don't get it. So you should also be aware of, if you put money towards like your RRSP, it gives you some tax benefits, like your income that is taxed reduces in that year. So you should be aware of that so that you can maximize that when you're filing your taxes. You should also be aware that your annual bonus, if you put it towards your RSP, it also gives you that benefit. And you could put your full annual bonus amount towards your RSP if you do not take the cash. When you take the cash, it is taxed. But when you do not take the cash, once you move it towards a retirement fund, it is not taxed until you need to utilize that money, which most likely you would save till you are retiring. So the fifth mistake immigrants make is ignoring retirement savings. So most of the West have like tax advantage accounts for retirement. So in Canada, we have RSP. In the US, you have your 401k. Be maximizing those accounts where you can. So if you have an employer who would match your individual contribution, maximize that so that you can begin to build some money towards your retirement, because whatever money you probably saved at home is not so useful when you now begin to spend in dollars or something. So you need to begin to build a new retirement fund account in your new country. So because you may have moved in maybe later years, not like immediately you finish school or start working, you want to try as much as possible to build up your account as quickly as possible so that you begin to enjoy the dividends of compounded interest. The last one, which is the sixth one, is avoiding financial advice or banking services. Maybe where you're coming from, you did it a bit differently, or you did not trust the bank, but you need to trust the bank and you need to trust financial advisors. Just because there's no other way you want to do it, like that's the system. You have to learn how it operates, how the bank operates, how the system operates, so that you can make the best of your situation or your financial situation in the new country you've moved to. So ask questions, maximize the relationship you have with your financial advisor or your banking officer. But ask questions so that you can avoid fees, you can know how to protect your money against inflation. You can basically just be more informed and catch up or get to speed with how the financial system operates in the new country you've moved to. So we'll come to the end of the video. I hope with these few points, we immigrants will be able to get the best out of the financial system that we have moved to, be able to save, invest, and maximize the opportunities that exist in the land that we've moved to. If you like this kind of content, please like, share, and subscribe.